What do you guys want to talk about today? NBA Finals, Game 1, Celtics looking good. The Belmont, even I'm not excited about the Belmont. GameStop? Oh, we'll talk about that. Maybe the whole show, except for the jobs number at 8:30. Set the queue for interest rates. Tim Quast, market structure, not on Monday, but on Friday. I guess DocuSign's not getting taken over. Trading down on earnings. It's Friday. It's a wild week. And you know what? We're going to have a wild day here on PreMarket Prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
Okay, folks, here we are, up 2 3/4 handles, 53, 66, 75, a double close right near all-time highs, which we almost exceeded in the pre-market trading. Buck flat at 104.04, TLT flat too, waiting for the jobs number. Crude rebounding from that slashing earlier in the week. We have crude up 47 cents at 76.01. Gold getting hit down 36.20, 23.54.60. Silver in the red, 86 cents, 30.51. Bitcoin having a good day, up $1,600 on the futures at 72,565. Let's bring in our historian of the markets, Triple D. I mean, what can you say about the price action in GME?
Bring AB in here too.
Yeah, come on, AB.
There's lots to be said here. This is just crazy. I had the popcorn going last night. I was tweeting up a storm, just watching this, sitting back and just like watching the fireworks and jaw-dropping action. Like looking at the stock go intraday. Obviously, we know Roaring Kitty's gonna make a video. Bye. He's gonna make a video. He's alive. He's him. He's making a video. 32, 35, 40, 46 closes. Then after hours, we can't stop buying it. They keep going. They go 47, 50, 55, 60, 65, $67. Buy them all. That was last night. Oh, but wait. There's fundamentals to talk about here. Company comes out with earnings. AB, this is where we bring you in. Trust me, Benzinga Pro. Tell us about these fabulous GME earnings.
Stonks.
Well, I mean, so this what may have been predictable for some people, but in addition to announcing the earnings, GameStop did say they will be selling more stock, doing another offering.
Shove the offering down their throats.
So non-GAAP EPS of a loss of 12 cents, which missed by 3 cents. Revenue of $881 million. That's not nothing, by the way. Missed by $113 million. I believe it was a sales decline of 29%. Sales decline for in-store sales in GameStop. And so, these preliminary earnings, not great. And again, they announced that offering as well. I don't think it was a huge offer. So it was 45, or GameStop plans to sell up to 75 million shares of common stock in addition to 45 million shares filed on May 17th. So if you added those a couple weeks ago, I mean, now you're up to 120 million shares that they're doing an offering of in the past month. So that becomes significant. And then again, that 29% sales decline, missing revenue estimates by $113 million. That's going to take some wind out of the sails here. And you saw the stock go from around $70 all the way back down to $40. Now we're trading right at $40.50 as we head into the open.
It's already traded 33 million shares this morning. That's not counting any shares traded on Robinhood. That's just exchange volume. So obviously this was trading like crazy in Robinhood last night too. I don't even know what to say. It's pure gambling. If you're trading this thing, people are like, you trade GME, you trade GME, you trade GME. I actually did try to trade it with a really small size. Like, I mean, like a tenth of a size of a normal position just for fun. Like, I think I was trading 100 shares. So, like, literally just for fun, like very small. And I think I lost 3 for 3, Joel. I was like, you can't trade this thing. I'm like, oh yeah, you think you're gonna tape read this? It's going, oh no, they pull the rug and it's down $2 now. And then it goes up. I'm like, it was just for fun. Popcorn trading is what I would call that, where you're just like, you're bored and you're watching, you can't stop watching. Like, whatever, you throw a little bit in the action there, but impossible to trade something like this from a technical basis. It's all over the place. So you don't know what the next headline's gonna be. But you can trade this thing on events. I mean, people buying it yesterday, we're buying. All of a sudden, we have an event. Roaring Kitty's coming out with a YouTube video at noon. So it's an event. This is an event trade. So buying ahead of the event is what everybody was doing. They were doing really well. Problem is, company comes out, sees this price, ridiculous price, going up and saying, hey, we'd like to sell some stock, raise some liquidity here, get in a better cash position, and they up the offer. So, and then they come out with guidance and the earnings, so you lose that. So in your options, you lose the whole prospects of, a great earnings report next week because it was supposed to report Tuesday. That's off the board too. I don't know what to say, though. If you're sitting here and this is your bread and butter and your GameStop's your baby and you think it's going to the moon, it's going to $1 billion because Roaring Kitty's with you now, I guess you wait to watch the video. I don't know what he's going to say. He's probably going to say, I got all my stock here. I think it's going to the moon. Maybe not, though. Maybe he's going to say I sold some. That would be disastrous. I have no idea what he's going to say. I have no idea the legalities to any of this anymore. We got regulators definitely going to be looking all over the place here. I think what he's doing is legal, because he disclosed. He didn't really say go out and buy it, But again, we've talked before, if there's a chain of hidden messages saying, that's showing collusion to make something like this happen, then he'd be in trouble. We don't know any of that. All we know is this thing is fun to watch. Get the popcorn out. Make GameStop movie part 2 because this thing is fun to watch.
Dennis, he's a former CFA charter holder. Did you
I don't
know that? Yeah. Yep. He doesn't have it. He's worked in the industry.
No, I think that's incorrect, Joel. So I don't
That
want
is
to start.
incorrect?
I'm pretty
Okay.
sure that is not correct information. I believe he had some type of designation. I do not believe it was the CFA designation. Correct me if I'm wrong. Or the memesters in the chat would know, but I don't want to start false information here. I don't believe that is correct. I don't believe he was a CFA charter holder. I think he had some, financial. He was in the financial industry. They were saying a DJK saying it was insurance. Yeah, like he was in the financial industry, so he would be held to a higher standard if he was working in the financial industry. He's not anymore. So I don't think he had a CFA though.
Okay. All right. Well, I'll double check that information, but I'll just say
he'd have a lot more trouble probably, but not necessarily. I don't think there's anything just on the surface illegal here. Like, what are your thoughts? I've said a couple times.
No. Well, first of all, people push the button. Okay, he puts out the information. He's not forced.
Not forcing anybody
he's
to buy.
got to be. He's got to have a. I'm sure. I mean, at this point, with what he's doing, he's been smart enough to do what he's done. He hasn't, created any kind of paper trail. At least
he's probably got a legal team.
He's got a legal. The lawyers always make money. Okay, if you want to learn something from this, the lawyers always make money. I think he has some damn good lawyers. Also, I rarely do this, but I was looking at the montage last night and the bids and offers, and this is algorithm. I mean, if you're a human and you're out there and you're doing things and good for you, but just the way I was seeing it trading, like when I just happened to catch it when it made the run from 59 to like 65 or whatever, and you'd see a bid for 5K at something at 59.5, and then it would go 59.70 bid for 100, and then a bunch of trades would go off at 60. And then it would be offered, there'd be no five, you'd see nothing. And then you see another 5K bid that no one wants to hit. Boom, then there's 100 shares. So someone's got a program. Someone's trading this with algos. And I wish I had the algo. But if you're a human and you're playing with this game and you know what you're doing, then keep doing it. Because if it's just, I don't know if you'll ever get an opportunity to see this kind of price action again in a stock. For better or for worse, if you got the secret formula to do it, go ahead. But man, there's some sophisticated algos out there that you're competing with, and
The
that's
chat
it.
is correcting me, Joel. They say, yes, indeed, he was. I did not know that. He was a CFA charter holder. I don't know if he still is. You have to pay your dues and everything, so I'm not sure if he still is or not. But he was a CFA charter holder, so correct. So when regulators, if he does go up against charges, he won't be able to like say, oh, I didn't know better, you know, when you have something like that. So, you know, that's something, and I'm not saying he's going to get charged. I think on the surface, I don't think he's done anything wrong here. Again, it would be about like a paper trail. Was there collusion to try to make the stock price go higher? If that's the case, he'd be in a lot of trouble if there's some collusion. But we don't know what's behind the scenes. All we do is, from what we see on paper, he posted an Uno card and he posted his position. There ain't nothing wrong with that, in my opinion.
Can he be part of the offering or not? I mean, it's coming from the company shares, correct? The offering. I mean, there's just so many factors in here.
He's working with them. Sell my stock for me. One thing to consider, when you are this big, how is he selling that stock? I mean, you could say, oh, he's going to exercise his options. So I guess he maybe never selling the stock. But when you're this big, I mean, they keep talking about what if he exercised those options, those market makers got to, you know, sell him that stock. Well, those market makers could get a lot of stock here today or ahead of it if they think he's going to do that. When do the options expire? AB, you're in the balance.
2 weeks from today. 2 weeks from today.
2 weeks from today, the options expire. So he didn't have to do anything imminently with the options. I mean, it's all speculation at this point on what is he going to say in this YouTube video. One thing I don't have to speculate on is there's going to be a lot of people watching this YouTube video. It's going to be market moving, what he says. I'm assuming he's probably going to not have sold any. Like, he hasn't really sold any yet, at least from his disclosures. So, you know, if he goes on there and saying, I'm holding and I think it's going higher, maybe the thing bounces back some. It can go anywhere. We've seen this. It went to $69 last night.
Throw your guesses in the chat for at least, so M45 said at least 500 million viewers, which would be more than every single American in the country. I think there's about 380 million Americans, which, I mean, it's a worldwide thing. My thing is like, look, it's going to be noon. People are still working. It's a Friday. I mean, it's noon Eastern, right? So that means it's going to be 9 a.m. on the West Coast. I think at start, you'll have around 100,000 people watching live on YouTube. Probably it'll gain from there.
I'll take the over on that.
Yeah,
we both did.
Joel will take the over on that too. Yeah. I'll take the under on 500 million. I will take the under on 500 million. I will take the over. I think he's gonna have. I think there'll be a. I don't know if he's gonna get the concurrence like that, but I think
live
there's gonna be a million people. I think he'll eventually have a million people. Not 500 million. A million people are gonna watch this though.
Live concurrently.
And I don't know if you get that many live concurrently, but way over 100,000.
Oh shoot! There's already 21,000 people.
Yeah, I know.
You're way over 100,000. I think you could get a million concurrence. I would set if I was betting odds, and maybe they're betting on this even. They do a bet everything on DraftKings and all your sports. I'd set the over under at 1 million. 1 million people. And I don't know if I would take the over or the under. What would we take? If I said it's 1 million.
Okay, I'd raise my price target to 500,000.
21,000 people waiting 4 hours earlier. 100,000 way low.
All right, hold on a second. I want to bring up two things here. One, and this is total speculation. This is what this show is all about. What if he cancels? Because there's new information, right? Isn't this a video? Like, he doesn't have the extremely difficult job that we have of being on live and interpreting things live, right? I thought this was a video that he already did.
I think it's going to be live streaming.
It is going to be live?
Yeah.
Okay. Because there's new information, right? There's absolutely no information out there, new information, that if he did a video. So we'll see. Kevin Costello says, go short, man. I wouldn't go short or long with your money, Kevin Costello. That is
gambling money only. Speculative capital here, man. People putting all their money in this. I feel bad. Like, here's the issue. And here's the issue that regulators should be thinking about is who's the people who are buying this at $69, $68, or $67, $66, $65 last night. There's some real losers out here too, folks.
I know.
That's when you artificially, have these artificial, and artificially jack up the price of this stuff. I mean, as long as Roaring Kitty's not selling into it, I don't think he's going to get in any trouble. But there's some real losers from last night too. Some people actually bought the stock up there. Bring Tim Quast in this conversation, because this gets into market structure. It gets into regulatory. He's all over this stuff too. Tim Quast is the man. Bring him in for this conversation.
Yeah.
We're gonna have a full GameStop show here today, I think.
Real quick before Tim comes in, my kind of like last thought before we hear Tim's, and this is just anecdotal and my hunch. So last night, we haven't done any sports talk because obviously GameStop has been, the predominant story heading into the market today. But last night, I was texting my buddies and trying to figure out, like, oh, should we watch the basketball game or something somewhere? And I think this is like a universal guy thing. So I don't know. Sorry to any female listeners or something, but my buddy was like, oh, well, my friend Tom just got a new TV, so we got to go to Tom's house. So we all go congregate at Tom's house because he got a new TV. And of course, the game, the basketball game was such a blowout. We start naturally talking about GameStop and stuff. To me, again, just anecdotally, it doesn't feel like people have the same interest. Like I remember when the first short squeeze happened in 2021, I had friends that had never even like bought a stock in their life asking me, how do I buy GameStop? How do I, my mom was asking me about GameStop. So Aaron, tell me what's going on with this GameStop thing. I keep seeing news about it. I'm not getting that same like feeling this time around that it has all these out. I think anyone who's already interested in the stock market is following this story, but I don't think it's reaching the outside people. And again, that's just all anecdotal, and we'll see today how much interest there is when Roaring Kitty does the thing. But yeah, just talking to my friends last night, it seemed like there wasn't, it didn't have the same excitement as the first time around. But let's go ahead and hear Tim's thoughts. We'll give Tim our special pre-market prep welcome and see what Tim's thinking about this. All right, Tim Quast joining us like from Colorado.
I am. I'm back in Steamboat Springs. I need to come on here just to have my ego pumped. It's
I pump your ego on Twitter too, Tim. I love you, Tim.
I love you guys too. But you're the only ones who refer to me as the man. So I like to hang out with all of you. Of course, Joel questions my mental acuity because he'll send me a reminder like, remember, you're on this morning. So
No, because it's a different time, Tim. It's a different time,
I'm just teasing you.
Hey, us old guys got to stick together here. You know what I mean?
Actually, I need the prompt. You're right. So what is it I should weigh in on? AD?
So Tim, we're just watching the GameStop fireworks. The popcorn's out last night. We got Roaring Kitty. Gonna make a video today at noon. The stock goes from $30 to $69 last night. Now they come out with an offering and crappy earnings, and the stock tanks it all back. It's just, unbelievable the volatility that we've seen in this after-hours session here, up to $68, back down to $39 here now. Roaring Kitty's still doing the video. I want to ask you, one, what are your thoughts here on legalities here, from, Roaring Kitty's standpoint? He was a former CFA, which I just found out. So we obviously, that's telling you, the markets. He's
and a compliance officer.
He came in with a huge position, posts a meme. I mean, what are your thoughts here on the whole, just the whole thing?
Right. So, and again, these are my opinions, and they may be as incorrect as many other things that I hold as opinions. But
sure.
So he was also a compliance officer. There is absolutely no law against talking your own book. Oftentimes, the regulators want to make people feel uncomfortable, like there's something wrong with that. But there is nothing wrong with it. You can talk publicly and express your opinion with your own book in whatever fashion you want.
Everybody does it.
Yes, everybody does it. So now, does it look? Does it look suspicious? Yeah, I mean, it doesn't look great to me that somebody talks up GME and then they sell stock. Of course, they haven't sold it yet.
He hasn't sold it.
Right. So, I mean, sure, you could say that the ethics of it might be head scratching, but the legality of it, to me, is largely unassailable.
I'm kind of with you.
Yeah,
I'm kind of with you. Same view.
Yep.
Unless, like I was saying, unless there's like a paper trail of like behind the scenes collusive activities where, oh, I need some money, I'm going to make this thing go. That's where you'd get into yourself into trouble if there's like collusion behind the scenes. But if there's none of that, I'm just taking at face value of what we've seen. You posted a meme and posted his position. I mean, you take that and do what you want with that.
Right. You could question how he managed to accumulate resources for a position of that size. Certainly,
That's
you can.
curious.
But he is entirely within his rights and prerogatives as an individual.
So, do you trade something like this, Tim, or do you just completely stay out of this type of stuff?
Well, it's a very good question. In fact, I wrote about this in the market desk note for the edge users today. So sometimes I write it, sometimes our chief market strategist writes it, sometimes our head of client services writes it. But I wrote about this. I said, if you look at supply and demand in GME, it's pretty good. It's 10. It's at a 10. It has a 30-day downtrend in supply. Supply is short volume. It's 48% right now. It's actually very liquid, trades $3,200 a time per trade, 100 million shares a day. But that doesn't always work. What my point to traders was the supply-demand signal in GME, as in the market, doesn't always work. Why? Because of this. At least 20% of the market cap in GME is tied to derivatives. And news can cause derivatives to be marked to market, meaning, to put it in plain language, a derivative is only as valuable as the probability somebody uses it. So then if information change, if you've bought a bunch of calls and then the stock plunges 30%, those calls are worth 0 and they get deducted from market cap, and it doesn't matter what the supply demand equation is. Have I traded GME? Yes. I haven't traded it here recently. Because there is too much uncertainty in the derivative part of the coin. I like personally to eliminate uncertainties, and I don't always succeed, but I want high probabilities, which means I don't want things interfering with the derivative side of the coin. And realize the whole market is that way. 18 to 20% of market cap, just pick something, Nvidia, depends on a right but not an obligation. And that can change dramatically. That's why we watch jobs data, because now that's become something like red 34 at the roulette wheel, where you can plunk a bunch of chips down, and it's really about the derivative side of the coin. So my cautionary note to traders is realize that derivatives can vanish, and there are people with a lot better information than you trading those.
Hey, Tim, can you show your market structure screen for GME if you think it will give us any? Because the chart's up here, and I'm not giving any levels on this thing. Is it something that we could get some information out of? Sure, please.
Yeah, absolutely. Here we go. Okay, let me hide that and go here, and let's go to GME. And here's what I mean about the supply-demand equation. So what you want to look for as a trader is, do you have strong supply-demand divergence? So here you have supply that is starting to trend up.
Still not seeing your screen here.
Oh, you're not? Okay.
Oh, here, I got it. I just got to.
There it is. Okay. AB's helping.
Okay. Thank you, AB. So here the green part of the graph is an algorithm. We normalize it to a 10-point scale, but it's measuring trade execution data under regulation national market system. And so we can meter how prices behave relative to midpoint price, because 90% of trades are derivations of midpoint. So when you have when demand is rising faster than supply, which it is here, a stock will have a propensity to rise. So that's the good news. But look at this. You can just go right here. Here we had demand at 10, supply trending down. There's that 30-day downtrend. And the price popped up, but immediately reverted. Why did that happen? Well, what happened right in here? Options expired. So you have to be aware of that if 20% or more of the value of the position depends on rights and people don't renew them, the price is going to revert, and it doesn't matter what the demand supply equation signals. So in something like this, you have to realize you are taking a much bigger risk than, say, trying to trade for a 1% gain in Williams or Google. To me, those are higher probability trades.
Tim, let's we've talked a lot about GameStop this morning, and I don't know, we might have just set a record, at least in the last couple of months, for making it this far in the show without talking about Nvidia. I'd be curious to look at Nvidia's market structure as well, and then maybe we can go from there to the overall market.
Good segue. 25
right.
minutes. It's over. 25 minutes. It's over.
I don't know how. Who had the line on like the mid-20s guy moving on from GameStop? That I should be the one that wants to talk about it all show, but I mean,
you saved us.
And I said we should go from Nvidia to broad market, but you asked me, is Nvidia basically just the broad market now? Is Nvidia the whole stock market?
Well, it's over half of the S&P 500's gains. There's that one stock is contributing that much. The joke to me about one stock becoming the market is something I got from a guy who used to be the head of investor relations for United Health Group, longtime customer of ours. Not right now. The regime could change, and somebody thinks that they know what they're doing, and they stop using our data. But this guy observed. He said, Tim, I think at some point the stock market will become one giant stock owned by one giant ETF. That's all it'll be. And in a sense, that's happened because SPY is the market, and it is completely dominated currently by Nvidia. In a sense, John's prediction came true. But this is the year-to-date view. So when you're looking at something, you want to say, how much time does it spend above 5 or at 10? Momentum stocks spend a lot of time at 10. Well, from January 2 to present, look at the amount of time Nvidia has spent at 10. When it's not there, you don't want to own it. So in this period, in April into the beginning of May, you should go do something else with your money because it didn't produce any gain. That gray part of the graph is closing price, but everybody covered. See that? So this set the stage for it to resume its rise. And you can always see that. It's a very easy way to understand in basic economic terms what's occurring, supply and demand. And this huge run we've had, people have had, this is his actual squeeze. So with earnings, there was more demand than even the pretty sophisticated traders expected, and they've been forced to cover. Now, what happens next? I don't know. At some point, demand will falter and supply will rise, and the price will stop rising. And as with everything, it's not going to continue to post these gains. But if you look at the data, pretty clear why Nvidia has become the stock market.
I thought you were going to say your buddy was the head of investor relations for Nvidia, and I was going to say that sounds like the easiest job of all time. You just have this. You don't even have to do anything to drum up interest in the stock. But this is great to be able to look at. I'm surprised even that the sentiment even got below 10 at any point in the last few months, because it feels like it's just been a bit of straight 10 the whole way through. But I mean, I think especially when you're dealing with these, stocks that have so much interest, it's important to look at the underlying supply and demand, because it's easy to just get caught up so much in the story and the momentum and the trades. But at the end of the day, to your point, Tim, what's driving the price is going to end up being the supply and demand of these of the shares.
Absolutely. And while everybody talks about the fundamentals, and it's a great business, there's no question. Jensen Huang's done an extraordinary job, but that isn't what drives the market. Realize that 7 out of $10 coming from investors today are following models. They're allocating money.
Hey, Tim, I'm sorry. I got to cut you off here, but we
30
got
seconds to the jobs number.
Okay.
I'm going to the background. You can keep Tim on if you want.
All right, Tim. Tim. We'll keep you on.
But I'm going to the background.
Okay.
We'll keep you on. Go ahead, Bob. I'm just going to jump and talk over you when we get the price action. So,
okay.
Go ahead. Let me just do the setup here. All-time high yesterday, 73 1/4. Hot number. Whoa. We just got a hot number, folks.
Yeah, I'm waiting for it to come in through. All right, so unemployment rate for May was 4% versus 3.9% estimated. So it was actually, more unemployment rose more than expected. Non-farm payrolls for May, though, was 272,000 versus 182,000 estimate. So beat there by about 90,000 jobs. So one number coming in showing, stronger than expected labor market, more payrolls added. The unemployment rate, though, did creep higher. It's looking like
which means participation decline. That's what it means. Yeah.
Okay, so the payrolls rose, but then the unemployment rate rose as well. Walk me through why that means participation.
The only way that the unemployment rate can rise if we're adding jobs is if the people who are looking for work decline. The participation rate. That's the math.
Because we're all making so much money on GameStop. We don't need a job.
Right.
Right. You can see the big red bar here on the. Are we looking at a 1 minute here? Yeah, 1 minute.
Yeah, I got the 1 minute. You know what I guess now? I guess bad news is bad news and good news is bad news. I think that's what the market is trying to tell you here because, the unemployment rate ticking up, that's good news, right? That, the economy is slowing down, but then the other number, which is bad news, kind of reversing that trend is bad news too. They did not hesitate on that number. They just pounded that right through yesterday's low, trying to rebound right now. But you also flipped up on that one, man. You flipped up to 53.80, which was a new all-time high when they saw the 4% number. And they saw the payroll number and they changed their mind here. So took out yesterday's low, was trying to stabilize above that. But Tim, we'll let you go after this. Where does this put the Fed? Where does this change the dot plot? Where does this change things for 2024?
Well, to me, there once again, of course, I've got bias, but I look at the supply and demand equation because it will tell you what all of the money, the global macro money, the fundamental money, the asset allocation money, thinks about policy. And I'll show you one last thing, and then
sure.
I'll
I appreciate you staying over time.
So let me show you this really quickly. All right, I'll have to share my screen. Take just 1 second here. AB, I may need your assist here.
I got you.
Okay,
my man Tim. Tim.
So here's how I think about this. If you look at broad market sentiment, I'm going to back up 1 year because I want to show you what happened when the Fed last changed policy. It said, okay, the hiking era ended. Here's what happened on the supply side. That's all you have to know. This was right at October 31st. Broad market sentiment way below the green line. It's bottomed right with month-end options expirations, and all the money shifted from short to long, and the market took off. So that tells you that what you look for then is, when does this global macro money in particular that goes long or short change its mind? Well, if you look at right now, we are at another one of these inflection points. This was an inflection point up. You go back to July, where everybody covered, it was an inflection point down because they covered and then shorted, and the whole market declined into this policy change. So where are we now? I can't tell you which way it's going to go. The market is technically bottomed here. The problem is the market never declined with this bottom. Why is that? Because of derivatives bets. So if the market believes the data, then this will decline. If the market does not believe the data, it will start rising and the market's going to tip over. And I can't tell you which it's going to be. I just get up every day and look at it and we'll see.
So what about, I guess right now, Tim, it feels like with the market all-time highs, you typically probably see the sentiment being pretty strong, like the demand strong. Does it feel like this time around at all-time highs, there's like less of this euphoria and interest in buying at the all-time highs?
Not necessarily, but I'll tell you what I think. Here's what I think, and it's market structure. And Dennis, I'd be curious to hear what you think. There were unbelievable rafts of data errors in the last week. We
Yeah.
had multiple exchange failures, what are called declaring self-help. So a platform doesn't work and I want to skip it. We had failures of the data system, the SIP, the Securities Information Processor. We had failures of the failover. We had volatility halts everywhere. There was massive intraday volatility, and no one said a thing. So here's what I believe. Lyft back in March, I think it was March, reported earnings and they put an extra zero in. And then they corrected it immediately, yet the stock went up 57%. My point is the market reacted to bad data. I think the market reacted to bad data. Now, why did we have bad data? I think it's T+1. I think the movement to T+1 caused people to take steps. I believe this was part of this, that for this whole period leading into T+1, the borrowing and everything declined. Well, that then it buoyed the market and the market rose. But the data are incorrect. So what if you make decisions on incorrect data? What if the jobs data gets revised by 50%, which it often does? Now you've made a decision on bad data. I think there's an element in the market of that. Now, that we may have no consequence for it, but I think that that's what happened. And why would I believe that? Because the market did not do what the supply-demand equation indicated, right? Rising supply and falling demand in the broad market should have brought the broad market down 2 to 5%, and it didn't. So will it? I don't know, but I think that's the cause.
Well, all right, Tim. It's always
right.
great to catch up with you. You give us so much info. It might take me another rewatch to even process all of this, but I love when you come on. Thanks for joining us. I know it's early for you. I can see that it looks like the sun's coming up though out in Colorado. A little beautiful sunrise.
Perfect day in Steamboat Springs, Colorado. About 42 degrees this morning. Dead still. Not a cloud in the sky.
What do you do when it's too warm to ski or snowboard?
Oh, and we've got snow galore, but behind me, the Yampa River is roaring. So we shift to rafting. We're out on the bikes. You just keep moving.
Nice. All right, Tim. Well, again, always great to catch up with you. We'll have to get you back on Pre-Market Prep soon. Enjoy your Friday and have a great weekend.
Thank you so much. Good to see you guys.
Thanks, Tim.
All right. Of course, that was Tim Quast, Market Structure Edge. I'll drop that link in the chat if you want to check out more from Tim, one of our favorite guests here on Pre-Market Prep. All right, guys, we got about 22 minutes left. We've talked GameStop. We've talked Nvidia now. Let's go through some earnings from last night.
We got Triple T back there.
Market. Let's talk.
Yeah.
Big move. So give us the numbers here again, AB. Obviously, we had our guest on during this number. We have had a pretty good sell-off here. We're down about 25 handles just from when that number came in. Tell me about the number because I'm trading the reaction. It's hard to look through numbers when you're trading the reaction. So please, now that we've kind of settled down a little bit here, let's analyze those numbers.
Yeah, EKS making my job easy in the chat here. U.S. non-farm payrolls was 272,000, so that was a lot more jobs added in May than was expected. But then the unemployment rate actually inched higher. I saw 4%. Oh, those are earnings. So unemployment went up to 4%. The estimates were 3.9%. So you kind of had a mixed bag. And to Joel's point, it seems like the market isn't really it's acting like one of those numbers is great. It's acting like both are bad. It's like you're taking the bad news from both. Like, oh, the unemployment went up, the economy's slowing, that's bad. And then we added more jobs. Oh, that's bad too, because that means, the market or the Fed's not going to be able to cut. So it seems like kind of taking the bad news from both numbers here and not hanging on to either one, looking at it as a good report.
We're getting just hammered here. This is a hot number. TLT, your lie detector test, is getting crushed right now. That is a big hit. It was trading at the highs, basically. We just, boom, down $1.27. That's a big move for TLT, folks. So you know what's going to happen is the IWM. I don't even have to bring it up. It's going to be down big time, down 1%, not quite as much as the TLT. Everything that wanted lower interest rates. This is a number that is telling us that, you know what, we may not cut this year. And, we just saw Canada cut. We just saw Europe cut. The U.S. getting all excited. Well, everybody else cut, and we're going to cut here too. Yay, yay, yay.
Nope.
A number like this makes you think that cutting is not imminent whatsoever.
You think no cuts at all this year?
I don't know, AB. I
I
don't know
don't
if it's
think
gonna be
so.
no cuts,
No.
but
There's
what I
no
will
reason.
say is the new information. All we do as traders is we trade on the information that we have. As we get new information, we make new trades. This information that we get today lets me know that they're not cutting anytime soon. Not anytime soon. Is it going to cut in September? Maybe data changes. We have 2 months until September. But for I just think there's a possibility that we don't even cut this year at all now. So we got to get more information. There'll be more jobs numbers. There'll be more economic data.
Inflation numbers next week.
More inflation
numbers.
data
Yep.
coming in.
Yep.
But this is one more piece in the puzzle. And this piece that went in today says no cut. So maybe the next piece says cut, and then the market will rally on it. One thing to consider, are we in like the perfect storm? Like you had Nvidia split, stocks running up, new all-time highs. And what do we always say on this show? When the trash starts going, when the memesters start, going like crazy,
Hallelujah.
it usually signals excessive speculation top. While we have everything for excessive speculation top.
Yep.
So if you're sitting here thinking, I'm buying this dip, we're going to the moon, a lot of things are telling you a little bit of caution. A little bit of caution is not a bad idea here.
I don't know how closely you were listening to Tim. I know you were banging away in the keyboard.
Yeah,
but,
I know. I couldn't.
Well, one thing that really, and I might have to listen to it again, resonates with me.
That's what
is this is coinciding with the change in the T+1, right? And his supply and demand figures are reflecting that. So how are they adjusting their books? How, the big boys, the institutions, do they have to adjust them? The holding periods, margins and things like this. I think it, because those days, was it Friday and Monday, just the price actions we had? Like when we had that, I always get, weary about the market. I don't like to see, especially last Friday, you rally 100 handles off the low, just basically out of nowhere. So I wonder if it's, like you said, a combination of a lot of different things, but just we'll see how his supply and demand, figures are distorted. I think this T+1 here is throwing a little kink in the way these guys handle money and the way
There's
they
some
move
adjustments for sure. I mean,
yeah.
you got 2 days where you don't have to worry about finding, where you're going to have fails. So it makes the borrowing a little bit tighter for sure. So, the fallout from that, that's something to think about there. I mean, again, it's hard to think about all this market structure stuff on the fly when you got the market tanking on economic data. So I would
another
love
leg down.
if we had a nothing day going on, I would have loved to have dived in a little bit deeper into that with Tim. But I mean, there's so much market action all of a sudden here that, this is a conversation for another day. So maybe bring Tim back on and talk about it. We're laying it down. This number was hot, folks. It's a hot number, and it says the economy is doing well, but it says interest rate cuts aren't coming anytime soon. The TLT is getting hit on this. So remember, what works okay? Sometimes your tech stocks don't get hit as hard, and they're actually holding up fairly well here right now. But holy macro, man, this is just a number that I don't think the market was expecting.
Big day for the bulls. Absolutely a big day for the bulls here. I mean, how many times have we seen these down opens? And I'm not necessarily saying, rallying back to unchanged or anything, but catching a bid above the lows from Monday and Tuesday. I mean, if you think about it, big sell-off. I mean, we're still up on the week, right? We're still up 34 handles on the week. You had Monday's low at 0250. That was right near, Tuesday's low 0250. Monday's close 04 even. I mean, a normal reaction, like if this is just another dip to buy, I would expect to find support above 5,300, hold the lows for the week, calm down a little bit and build a little bit of a base. If somehow, we just can't hold it together and we take out, make a new, that would be interesting. We made a new high for the week off that number, right? A new all-time high off that number. And now I mean, we could be at Tuesday's low by the end of the show with the way that we're going down here. So I think the Bulls really got to dig in here.
You still have stocks near highs. You still have buy the dip mentality everywhere, and that's hard to break. So I'm not going full bear here. I'm just saying we're at all-time highs. If you want to ring the register, I won't argue with you. Am I initiating shorts here and selling everything and going, no? But I think if you're sitting on trading profits here and you get a number like this and you have everything setting up, I mean, even Nvidia. We haven't talked Nvidia much on the show here today because GameStop took over. I mean, if trades post split Monday, the pattern typically, and we have seen stocks kind of following what they normally do. We talked about a pre-split run for Nvidia. We got that. It's usually a post-split hangover. So I would expect Monday maybe open a little bit. People are excited it's a lower price stock and then actually closes red. I think you could see. You may have seen Nvidia's top here, folks, for a while. I'm talking as my book. Obviously, I own Nvidia long term. I don't think it's the all-time high. I think the story is still in the early innings. But I do think we are way overbought on the stock. It ran 20% up on a stock split. I mean, could you see 1,000 again in Nvidia? Could you see $100 after it splits? I think so. Would I be a buyer down there? Maybe. But
I know you're holding the position. I know a lot of time. I haven't told you I haven't given you like a sell, like a potential sell, but I just for our Nvidia shareholders, and of course everything's going to be adjusted on Monday, and I'm really going to like it. But like the price action yesterday was bouncing around pretty good. You made a new all-time high by over $30, which is great. I mean, that's absolutely fantastic news, right? But you gave it back. So I don't know if you looked at your email, but like in the middle of the day, I said your number now on the upside is that all-time closing high from Wednesday at 1224. And I don't think it ever got back up there intraday. And for me, no position in the stock. I'd be looking at this low from Wednesday at 1175. We're $7 away from that. To me, that's a little bit of a trap door because there's no daily lows there for another 35 points. And then after that, another $20 and then another $60. So that's what I'm looking at. If, going into the report or, going into, the split on Monday, I mean, I don't think you're going to see 1224 today, right? I think today your level would be the mark. And the mark today comes in at 1209.98, which is the second all-time closing high. And then just going back to looking at the closes, looking at the levels last night, you had the all-time closing high in the S&P at 5366. You had a lot of movement yesterday. You closed right near that level. So, the closes, just emphasizing, the closes. Look at your closes from last Friday. Look at your closes from last Monday or Tuesday. And then, see if this is just because really, I mean, if you think about it, we did spike up to 5380 because people saw the 4.0 number. That was really quick. And then they pounded it. I mean, in the whole perspective of things, this is not a big decline. This is a retreat from highs, which is normal in a bull market. It's going to be, moving forward is what we need to focus on.
I don't know. Like I'm torn. I have my original position. I actually paired it back already twice. I've sold Nvidia twice on the run just because it started to take over my portfolio. Do I want to pair it back again? Yeah, all the trader in me says, yeah, pair it back. Like I want to do that. But then the investor in me says, man, stop trading your investment portfolio. You like Nvidia, you think it's in the pole position, you want to hold a core holding. You've already sold it twice. I bought it 3 times and sold it twice. I mean, I'm basically back to what I originally bought at 410. That's basically what I've got. Maybe a few extra shares, than my original purchase for it. No, but basically that. So I'm like, do I want to I basically tripled my money on it in 6 months, which is honestly unbelievable. So, I mean, gift horse in the mouth is, yeah, ring the register. Let's just go to cash and sit on the sidelines for a bit. But then what happens is the dang thing starts going and you're like, it pulls back 100 points. You're like, yeah, I'm glad I sold it. And then it's up 500 points 2 years later. And you're like, why'd I sell it? So, I mean, it's tough trading your investment portfolio. If I had this on for a trade, folks, if I was Nvidia was in my short-term trading account, it would be long gone right now. I'd be selling it. I
Looks
would
like
have
we're
sold
getting
it
a
way
little.
earlier. I would have sold it when it started, just the pre-split run. I've traded it from alongside a couple times in the pre-split run. I mean, I'm not sitting here and didn't think it's going to go up 20% on a pre-split run. It was an insane pre-split run. It's one of the biggest pre-split runs I've ever seen.
Tesla
So
was up there.
you got
Tesla had it.
excessive speculation everywhere here. I
We're
mean, let's
getting a
look at
nice little
GameStop,
bounce
go
on the.
back to it today. It's down $10 now, Joel. I mean, this thing is 30 points off the high. It got cut in half from where it was last night. And now you have the kitty going to come out, do a video on it. Is he going to save the day? What's going to happen here? This day is going to be very hard to predict, folks, on everything, not just on GameStop, on the overall market as well. But I think if you're in, I don't understand what's happening here, it's always prudent to raise cash when you're uncertain.
Yeah, so GameStop specifically, there's a lot of uncertainty. It does look like we're getting a bounce in the overall market, and I mean,
Nice
I
bounce,
would,
yeah.
yeah, and I mean, I don't think that the numbers this morning derail anything in terms of planned rate cuts or anything like that. I mean, think about it. The unemployment rate went up. It's gone now up from at the beginning of 2023, 3.4% to 4%. So for the whole year and a half, Powell was talking about we're going to raise interest rates. There's going to be pain in the labor market. We never saw it. The economy has remained strong. And by, a lot of metrics, it is still strong. But seeing the unemployment rate go up 0.6%, that's not nothing. And meanwhile, you do have a lot of signs right now that inflation's coming in. So if that ends up being the case, I mean, I don't see why the Fed doesn't cut rates in September, doesn't cut another 25.
No, there's no reason to, with the economy doing what it's doing. I know unemployment's going up, right? Different reasons. Also, they could kick you in the head with a revision next month too. That was another thing that Tim talked about.
But it was the opposite. They've been revising down. They showed that the U.S. economy actually added 700,000 less jobs last year than what was originally reported. So I can pull here. I thought I shared that on the show the other day, but I can pull that up as well. That these a lot of the revisions right now are going the other way. And I mean, I'm just looking at the CME Watch tool right now, which was already updated after this morning's earnings.
Yep.
And they're still showing, September. It's more likely than not. Oh, actually, this did go up higher. It was 30% yesterday. 30% yesterday that we would stay at the same. And now it's saying that there's more a bigger probability or less of a probability that we cut, but still more likely than not. 51% that we're going to be 25 basis points lower, 4.5% that we're going to be 50 basis points lower. So they're basically saying it's about a 55% chance, more likely than not, that we are getting this cut. And that's in September. You go out to December and we're looking at basically we're looking at only
That's not a good. I mean, because the Fed raising, cutting interest rate. I mean, if that's like the main part of your investment thesis, then you should just be buying IW. You should just be, if that's what you're looking at, then why isn't the IWM reacting like why is it this same?
Well, the TLT is telling us, in the recent action that maybe AB's theory holds water. We started to see rates trickle down, long-term rates. Then you get a day like this, and you get back a third of the gains from the last 6 trading sessions or 7 trading sessions, and you're like, we're not out of the woods, Bonds, it's the lows in. I think so. Are rates going higher? I don't think so.
I don't think so.
Are rates getting cut? We looked at, when we started this year, AB, when we started this year in January, the April probability for cuts was something like 90%.
Right. I mean, all this changes based on
it just keeps moving target.
We saw it become like 10% less likely that we get that rate cut by September this morning, just based off that data. My point wasn't saying that I'm just going to go out and buy everything because I think the Fed's cutting rates. It's that my point was more just I don't think that these numbers this morning really changed that much, at least until we get inflation numbers. I mean, if we get inflation numbers that continue to be hot, plus adding more jobs, then that changes the story a little bit. But in my prediction, that inflation actually the data is going to show that inflation is coming in over the next couple months, then I think these numbers become less important that we got this morning. And here's the number I was alluding to that I thought I shared the other day on the show, that the revision actually went the other way. So this was from Bloomberg. Let me zoom in a little bit so we can actually read it. Bloomberg Economy out with a jarring report saying monthly non-farm payroll prints likely overstated job growth last year by 730,000. And the title of this report was Unexpected Spark for Fed Cuts Hidden in Plain View. So if these numbers end up being less strong, like we've all been talking about how incredible the labor market has been the past year or so and how strong the economy has held up. But if we start getting revisions that show the economy really wasn't that strong, then that changes a lot of things. And then again, just going back to the overall market price action this morning, we sold off that bounce a little bit, now back down to down 0.5%. But again, like does coming down 0.5% from all-time highs like change the bull thesis or the sentiment at all? Like, I don't know.
Nothing. All we're doing is, again, on this show, as we put pieces of the puzzle together. The piece we got today says, I want to raise a little bit of cash, maybe. I don't want to just buy this dip. And maybe I'm wrong. And maybe you just blindly buy every dip and, you make money. And it seems to work because the stocks eventually come back. But, as a trader, I go long, I go short. Does it make me want to come out and short stocks this morning? Not in the whole. But does it make me want to sell rallies? A little bit more. I'm always selling rips, buying dips. We got a dip. I'm not buying the dip. So am I going to sell the rip if it comes, a subsequent rip, like we get back up? Maybe. Am I going to raise some cash into this? Maybe. I mean, I'm not fully invested. I got quite a bit of cash already. So, do I need to raise more cash? No. But I just think if you're sitting on big profits and you're sitting, to your point, 0.5% from all-time highs, you're selling the top. Even if you sold in the hole today, you're still selling the top. This is a top. We don't know if it's the top, but there's lots of things where you look and you're like, nothing's cheap, man. The stock market is not cheap. We've talked, Apple valuation, not cheap. Not expensive, not cheap. Nvidia, not super expensive, but not cheap. Tesla, I've had that, definitely not cheap. Not cheap at all.
As long as Alibaba is still trading on the stock market, you can't say there's nothing out there that ain't cheap, because there's something out there that's cheap.
And that's just and I buy those two cheap stocks. Baidu and Alibaba trading 11 or 12 times or whatever the hell they're trading, 10 times earnings. And look what happens. You lose money. You buy Nvidia at 35 times earnings, you make money. You buy Baba at 10 times earnings, you lose money. Market's entirely value traps.
Baba was perking up a little bit yesterday, and I bought some calls that expire today because, like, I feel like a lot of times when I'm trading options, what I'm doing is kind of looking at like a risk reward type thing. And like it was $81 calls. We're trading at like 15 cents or something ridiculously cheap, and it got up to $80. I was like, I just need this to open up like $1.50 tomorrow. That's not crazy. And then I buy the calls, and of course I look at it this morning, it's down 1%, because of course it is, because that's all these Chinese names do, is they'll pop a little bit and then just pull back every single time. It's like clockwork. So maybe instead of next time I see Baba perking up, maybe I go the other side and buy some
fun exercise here really quickly, like. And again, to the value traps. If I look at my long-term portfolio, let me just go in here, take a look, what I'm holding. And, my account was at all-time highs. So I'm doing good. But you want to know why? It's because of those AI stocks. And that's pretty much it. If I look here, here's my holdings. I've got American Airlines, value trap, dog, garbage. I've got AMD. I was way up in AMD. You know that. I bought that thing at $95. So, again, that's 49 times earnings. That's a winner. Amgen, I'm slightly up on that. That story. I have AV, which has been fantastic. AeroVironment. That one's been really, really good. I have Alibaba. I'm down $1.50 in Alibaba. I bought 81.44. It's $80 here right now. Value trap. I have Baidu. My average cost base is 108. It's 98. Value trap. I have Bristol Myers. Trade like 6 times earnings. 48. My average cost base is 41. Value trap. Junk. Bank of Nova Scotia, Canadian, junk. I have Bitcoin. That's good. Bitcoin's doing good. CIBC, I've had that for years, so that's I've had that for like 20 years in there, so I'm up in that. Dell, I just bought. I have Globe Life. Remember the GL? I still have a little piece of that.
So
I got another short report yesterday.
Intel, I bought. Junk, value trap, junk. You see that's a pattern. The value stocks that I put in the portfolio, I'm losing on. The momentum stocks I put in the portfolio, I'm making on. Maybe the market turns eventually, and we're just been in this market. But that's, where I'm really at here. I've got some Loblaws preferred stock. That's fine. That just pays a dividend. It's up a little bit there. I've got a Canadian bank, Laurentian Bank, another value trap, trading like 9 times earnings. How can you go wrong? You go wrong and you go down. These value stocks just go down. Nvidia, I'm up 193% in Nvidia. Well, that's saved my whole damn portfolio. Like, throw the lifeline. Oracle's been good. I'm up 20% in Oracle. That's been a good one. Palo Alto Networks, I just recently bought. I'm down 1% Palo Alto Networks. Pfizer, another fun value trap. I'm down 38% Pfizer on this position, although I have it in another account too, and I'm way up because I was average cost of 14, so I'm in 2 different accounts.
You just reminded me something I wanted to mention today.
Yes?
So we haven't done a lot of sports talk, and I will venture to say that this is the first time in pre-market prep's history that this sport has ever been discussed. But yesterday there was a big upset in the Cricket World Championship where the USA team beat Pakistan, which is like a powerhouse in cricket. No, and it was someone said on Twitter it was the biggest upset in the history of cricket. I was like, I don't know. People have been playing cricket for like 500 years. I'm sure there's been some pretty big upsets. So I don't know how true that was, but this was a tweet that I saw from Front Office Sports, who does a lot of stuff. USA just defeated Pakistan. I'll make this full screen. So this is I'm going to mess up the name. Sarub Netra Valkar is one of the Team USA's top players, but his full-time job, principal engineer at Oracle. So this guy's working like a full-time job, probably working 60 hours a week in Silicon Valley, and he's still got time to be one of the best cricket players in the country and helped us deliver a win against Pakistan yesterday. So thought that was interesting because he's probably going to be walking into work on Monday, shoulders pinned back, walking in like he's the man, because everyone that he works with saw this news story that he helped defeat the Pakistan national team. So shout out to this guy who, again, not only has time for a full-time job at Oracle, but also on the U.S. cricket team.
Did you have that parlay with the Pan Am Synchronized Swimming Championships?
Yeah, I did. And and then I had the Jamaican bobsled team in there as well. So I'm still waiting for that.
He's all over everything. This guy gambles on everything, man.
All right, guys.
He does well, though. He's going to be a professional gambler.
Up against the clock.
So anyways,
here.
I just wanted to finish before we went on the tangent here. My point was, and I own the Qs I'm way up in. I own the small caps, IWM down in that, because IWM sucks. I own emerging markets. I'm actually back up to scratch on emerging markets because emerging markets fund because so many other non-China stocks have done well. I own the XBI. I'm down 1% in the XBI. So I kind of, and Tesla, I'm down 2% in Tesla. Everybody's trashing me on Tesla all the time. I'm down 2% in Tesla. So anyways, bottom line, you can clearly see the theme in my portfolio is momentum, storied growth stocks, killing it. The value stocks have just been absolute trash. So overall, because I have a little more growth, my portfolio has done pretty good. But the long-term portfolio would have done a hell of a lot better if I didn't have any value stocks, and there would have been absolutely killing it. So alternatively, I have my kids RESP. And let's go over time here just a little bit. The kids RESP, I'm like, they're going the long term, and they're going full Momo. They're going like full Momo. They own 16% of the portfolio is AMD, 10% is AeroVironment, 25% of the portfolio is Nvidia. I have 16% of the portfolio in Tesla, which are actually up 5% in Tesla because I picked it up in the 160s for them. I do better for my kids. They have a Viking Therapeutics. Viking Therapeutics has been terrible. But I mean, overall, that portfolio is just absolutely murdering my own portfolio because I didn't put any value stocks in there. Shouldn't have went the value. That's the story. I don't know if that changes. We have just been in a momentum market, folks. Value might come back into favor. Diversification always works. I'm not saying don't throw them all away, the value stocks, but I'm telling you, in the last 2 years, value has massively underperformed. Massively. And I can see it in my own portfolio.
Okay. All right. We're up against the clock. I know, Dennis, I've had some deep thoughts on Tesla lately, but I want to do that offline with you. I know you're working with the driveway, so maybe next week we'll talk about it. Overall, I mean, we're bouncing off the low, hold the pre-market low, rally up here, mid-range on the session. We've had, let's see if you get back at the 53, 55 area. That's halfway back on the day. And if the bulls are just going to reassert their control, then, we'll get back up near that double close at the 53.60 area. I don't see us taking out that pre-market high at 53.80, but anything can happen on that. Monday's guest, the cow guy. We're going to bring the cow guy in. And Scott Schlade is going to be with us. Belmont, I don't know. I'm just not excited about the Belmont here, folks. I haven't even been able to scratch up an article. So if anything, I might go with the winner of the Peter Pan anti-Quarian. He that did well for me last year. The Peter Pan winner
We're doing the
won the
Belmont in
Belmont.
Saratoga this year, right?
Is it Saratoga? And it's only 1.25 miles. So
It's shorter.
that's
It's shorter than it normally is.
Yep, for the first time ever. So fun show, guys. Get the popcorn out at noon. And we'll be picking up the pieces here on Monday morning.
Yeah, and so just a quick note, we will be doing a stream here on Benzinga's channel where we will be essentially re-streaming Roaring Kitty stream at noon, but also adding our own commentary in. So if you're looking for more of kind of like a watch party and everyone can be in the chat talking about what they think, yeah, it could be a fun thing to check out on our channel again at noon. We do have live trading starting up right now. Other than that, hope everyone has a great Friday and great weekend. Hope everyone stays safe, whatever you're doing, and we will see you guys on Monday.